What's up, everybody? Welcome back to Trading with Artist and Will. I hope everyone is having a fantastic weekend. I'm back from Paris, and honestly, it was a really rejuvenating trip, but I'm really excited to get back into things, especially since seasonality-wise, April is supposed to be a better month, especially with tech leading, so we'll see if that happens again this year. Let's take a look at the weekly red folder news for the week. We don't really have that much, but we open and close the week off with some pretty important data. So on Monday, we actually have flash manufacturing and services PMI. And as you can see from the forecasts here, we don't want to see PMI really perform that much better than what was coming in previously. And the reason why is because the market almost kind of wants the Fed to cut rates in May because there's so much indecision and inflationary pressure right now. We want to see some type of slowed growth. That way it might be easier for services and businesses to lend out. And then on Tuesday and Wednesday, we don't really have any news there until Thursday. We have GDP as well as unemployment claims before market open. And to close off the week, we have core PCE, which is probably going to close off the week with some pretty big move. Now, let's take a look at the market as a whole. On the weekly time frame here, I want to keep talking about this 50 EMA on the weekly time frame. And honestly, we're probably going to have to talk about it for the next couple of weeks, maybe even the next couple of months, until the market decides to do some type of recovery and go from there. So we managed to retest and close above the 50 EMA here, but you have to look and see that we didn't close on the weekly above the previous week's open candle print, which is around 565, 566. And then we go down to the daily time frame here. We're riding up against the 8 EMA, and we're kind of struggling to close above it. So in some perspectives, you can actually view this as a potential bear flag here. And if you are kind of like me, where I struggle to look and see a bearish setup because long and over time stocks only go up, use Alt-I on your keyboard. It's a shortcut for inversing your chart here. So if you struggle to see it in a bearish way, this will give you a bullish perspective, which obviously is bearish, right? So this does look like a potential bear flag here. We did have a lot of volume coming in Friday, but that was triple witching and OPEX, meaning that a lot of short positions had to be closed out because it was expiring. And so that potentially, because of that covering, led to a lot more buying pressure in the market as a whole. So it's not really that indicative of a direction for the market. And that's why this week is important in terms of seeing where this new money that has been refreshed is going to be deployed and whether or not this is actually a bear flag or we're actually building some type of support to bounce up and test at least around the next EMA around 571 and maybe even potentially around 580. What we would really confirm this upward movement and a potential bottom is we want to see a daily close above this 570 area, which is just roughly around where this recent high was, 569, 570. And we want to see some type of constructive buying pressure and price action. So we don't want to see a daily close above this level and then just a straight rejection, right? We want to see a daily close above it, maybe a consolidation day, and just building more to continue higher in the market to really show that could be a potential temporary bottom here. Now let's take a look at the previous week's watch list. I'm going to say that although some of these names closed off the week pretty poorly, had a great move to take advantage of to start off the week. So the first name was Baba here, had a fantastic move to break past this 145, was really, really good to kind of play off that trigger here. This move was just about a 4% move here. I think that it's really interesting, right? Because Chinese names tend to do better when US markets are not, because money is flowing out to international names or even just risk off names here. And because the market started to recover a bit and US names started to do better, we saw the rotation of money coming out of China. And that's exactly kind of what you see happen at the end of the week as we had two inside days, but then a gap down and a break past this structure. So this is a good example of a name that you play that breakout and then you set your stop losses in place. And then once that breaks that structure, you know some type of sentiment has changed here. So it's important to kind of piece this together and look at what's happening at the rest of the market. And it's very similar, but not as the same for PDD here. So surprisingly, PDD has had phenomenal strength when you compare it to BABA and other Chinese names here. And one of the biggest reasons why is because they had earnings on Thursday. They did end up missing revenue, but their margins were better. They were able to be more profitable as a company. And so this is pretty interesting. We had a great explosive move again to start off the week, which is great to capitalize on to capture almost a 5%, potentially 6% gain on this. And now we're just kind of consolidating right in this gap area. So I think what I would want to see in the future is to see if PDD as a whole is able to break past either this 131.5, which is this wick made off of that earnings candle, or a break under this 119 area. So to me, that's the new range that PDD is trading in. And so anything in between it is just no action from there. So definitely something to keep an eye on, given its relative strength versus other Chinese names. Next item on the list is Palantir. Palantir was such a good one. What happened was we ended up gapping up, but then we had this hammer here, which could be interpreted as a bearish hammer, as it's kind of like a doji showing a lot of selling pressure. But what ended up happening is just phenomenal buying strength here. And you can actually see that volume's increasing as the week continued to close off the week on a really, really bullish daily candle. And if you go on the weekly here, this is a really, really good look here. It gave up the weekly 8 EMA, but then we ended up recovering it and printing a bullish hammer on the weekly time frame. We closed above that 8 EMA. So I hope you guys were able to take this one. I'm still in this trade. I did take the April 17th 100 call strikes. So I'm waiting to see if we can get some more return off of this. It's looking really good. I think the first target is going to be around this 95 area. And then honestly, we could test this 99 to 100, probably maybe not this week, but the next week if we get good data and just some type of continuation move in the market as a whole. The next name was SMCI. So I'm going to consider that we went 3 for 4 for last week. So SMCI did not trigger. It was really dangerous because you might have gotten fooled by this tiny little gap up here at market open, but then just that straight rejection here. So this is kind of important in terms of showing you that you want to see some type of constructive close above key levels to really tell you that that level has been kind of broken, right? So if you go down to the 5-minute time frame here on Monday, we didn't gap up to above that level, that trigger, but we ended up tapping it and then we rejected it on the next candle. So because there was no candle close above this level in our trigger, this is a no action kind of name here. So lots of great stuff. Let's move on to the top names I'm looking at for this week. The first one on the list is going to be Uber here. I have taken a position, but I'm looking to add more. I'm in the April 17th 80 call, and I want to get a lot more on this one. Let's take a look at the weekly here. Really good constructive price action here. It's very similar to Palantir in the sense of that we reclaimed that weekly time frame 8 EMA, and we actually closed above the previous week's high. So that bodes really well. And you also want to see, if we go down to the daily here, we ended up printing an inside day, and at the end of the day, we crescendoed and closed above it to kind of break that inside day flag. I think the next point of resistance is going to be around this 77.7 area, but once we're able to break that, we're going to be most likely testing this 80 and 82 area, which is this high that was made at the end of February here. The next name on the list is TTWO, and this is kind of a really good example of how it's not just setting a watch list at the beginning of the week and not updating it during the week or as the weeks go by. So this is the kind of flag I had drawn at the middle of March, but as you can tell, there's more new price action. And so these charts kind of have to be updated, right? So it's just an important note to that lesson that you should always look at some of these names during the middle of the week and try to update it based on what's happened with more recent data. So if I'm updating it here, because of this failed breakdown, and we actually defended this gap up from earnings here, this is the flag and consolidation I'm looking at now, which looks really, really nice. And if you go up to the weekly time frame here, we just retested the weekly 8 EMA and we bounced really, really strongly off of that. So I'm looking for most likely a break past this most recent resistance at around 216.5, and I'm looking to take the April 17th 220 call. I think it's really easy if we can break past this and have that confirmation like we talked about before and actually hold this level on the lower time frames. We're more than likely to not to try to test that 218 area, and of course get to that 220, which is the strike that we're targeting on this name. The next name on the list is going to be Netflix, which if you look at it is the strongest Mag 7 out of all the others. So if you look at Amazon and Meta and Google, all the prices are below the EMAs, right? Whereas Netflix is actually right at the 8 EMA and very, very healthy with all things considered. So this is a name that you definitely need to keep on your list, especially if large cap tech stocks are going to start getting bids. I'm looking at the April 17th, 1100 strike. I want to take it off a break of this resistance of around 967.63. We tried to break it 3 times now, and we've had a lot of resistance there for this whole week. And if you really want to play it safe, you could play it off of this 973.69 break, which is the wick off of this rejection candle that was made on March 6th. The caution that I want to tell you for this name is that yes, IV is really strong. These contracts are super expensive. That's exactly why I chose the 1100 strike, just simply because the 1000 or even the 980 strikes are just so expensive and just not worth that risk, especially if you're dealing with a smaller account. It's not well-intentioned to all in your port on one contract, especially on a name like Netflix, because it's so volatile. But that also means if you get a further out the money contract, you'll still be able to generate some good profits, which is why I'm targeting at 1100. It had good OI, but it also had pretty good volume on Friday as well. The first target for Netflix here is going to be around this 990 area, which is on this volume node. And if we're able to break past that, we can probably test this 1000 area. It's that mental number again, right? And if we're able to test around that 1000 area, the 1100 strike will likely gain pretty good delta increases as well as just premium increase as a whole. But of course, the thing you need to caution is because it's such an out the money contract, you want to make sure you get a good entry so you don't get premium burned. The next name is going to be Zscaler here, and the same thing, right? This update is this little trend line break here. The original one I'd had was off of this little trend line, but of course we broke past it, failed to hold it, did it again, and now we're up against that trend line again. So this is that new trend line that I'm looking at. You could easily take this name and take this trade off of the break of this 206.67 area, but if you want to be really safe, you want to try playing it off the break of this 211. And I'm looking at the April 17th 210 call. We can easily, if we can break this 211, test this 216 area. We still have this really, really large gap that was made in the end of February off this earnings. So that's something I'm really looking forward to see if we're able to have a continuation and actually break this trend line and see some type of high momentum move to test at least 220 and then potentially the start of that gap at 227. And lastly is going to be Palantir. I moved it from the previous week to the top of the list for this week. I want to see continuation off of this. I know we talked about it already, but if you're not in this position already, I would look to see some type of retest at around 88 or even this EMA at around 87 to 85 area, and see a really healthy bounce and then kind of build that as new support to continue that upward momentum move. Because as you can see, the EMAs here are curling, and we've actually curled and broke past the 50 here, and this is healthy. This is exactly what we want to see on a name that's trying to catch more bids and kind of reverse here. So the next thing I want to see is consolidation, likely a retest of that 88 area and the 8 EMA curling past the green line, which is my 21 EMA. And then as for runner-ups, I have 2 names. The first is going to be Intuit, which is INTU. I'm looking at this interesting little flag here. The only reason why it looks a little weak is because it's in this little downtrend and it's starting to see a little bit of a struggle here. The weekly doesn't look that clean. The range is clear in the sense of that it's off this earnings candle here. It's really hard to trade this one if it's in this giant range. This range is at about almost a 16% move. So it's going to be hard to trade this one. The breakouts won't be as clean until we break past this range that it's in. But I'm looking to see if we can break past this 610, which was made on Wednesday here, to potentially break this flag / trend line here. I'm looking at April 17th contracts. The contracts aren't that great, but you want to look for something with good OI and good volume for that day. The second name that's a runner-up is going to be MSTR, obviously a crypto slash Bitcoin play, but we're starting to see some pretty clean action here. This is very similar to what we've seen on Palantir, right? The EMAs are starting to curl. We're starting to kind of build that constructive base here to bounce back up and kind of signal a reversal. The weekly here looks pretty decent too. What I would really want to see is a break past this 309, 310 area and actually hold above it. The reason why is because it's right against this 50 EMA on the daily, which is around 304. So if we can break past it and actually hold on the daily, retest it and actually hold it, we can probably see a continuation move to test at least this 321, maybe even this 328 area. But of course, MSTR's back price action is going to really, really closely reflect what Bitcoin's doing. So that's what you want to look at to confirm if Master is going to have a continuation type of play. Thanks for tuning in, guys. Good luck on your trades this week, and I will catch you guys next week.